Hi everyone, welcome back to another live interview here at the Business Exit Summit. I'm delighted to be joined by James Frank, the Chief Executive Partner at Frank Law and also the founder of Brolly Capital. James also recently spoke on a panel today about understanding the different types of exit. And what's really interesting about James is he's got this unique perspective. He's both advising founders on exits as their lawyer, and he's also the one writing checks as an investor through Brolly Capital. So we're going to dive into a very interesting conversation today. James, thanks for joining me.
Thanks, Rhythm. Pleasure.
Absolutely. So James, I love this line from your bio, which says, you see cubes where others see squares. So that definitely suggests that, you're looking at things differently from most people. So can you give us like a real example of where you've spotted an exit opportunity that others might have completely missed?
Yeah. So, I guess the classic example is where it's an add-on to a strategic directive that, someone might have. So we recently advised a client on a sale. It ended up being to an offshore entity, listed entity, where they were looking to expand into the country, not in their direct vertical, but in a really complementary analogous vertical.
Right.
And actually they were really, really hot. So we did the deal really quickly because they saw the value. They could see how they could use that as a platform to expand more. And the client got a really good result out of it, and they're really happy in terms of post-transaction. So something left of center, but equally everyone is happy, and it unlocks the value for the buyer. Yeah.
Amazing. That's truly wonderful. Now you're in this unique position where, you're working with founders day to day through Frank Law, and you're helping them prepare for exits. But then through Brolly Capital, you're also the guy on the other side of the table writing checks. So what's the biggest disconnect that you're actually seeing from what founders think about the exit journey is going to look like from what like the reality is that, what actually happens?
Yeah, I think probably understanding risk. So as a buyer or an investor, you're looking at how do I protect my risk, right? What is my risk? How do I protect the downside of the risk and all that sort of thing? As a founder, you know the business intimately. And so I don't know the business intimately. I just get to look at an information memorandum or a pitch deck or something like that. So, there's this disconnect between what the founder knows and what I know as an investor, as an example. And so the biggest challenge we have is trying to get alignment on the solution that solves the founder's problem of wanting to exit or wanting capital, and the investor's problem of wanting to make sure they're not going to back a dud, And so I think that kind of balance, that sort of seesaw is really challenging. And usually that comes down to price, unfortunately. That's kind of the main mechanism, or valuation. But done in the right way, I found that most founders understand that, but it is very much a people conversation. It's not a paper, lawyers at 400 paces.
Yeah, definitely. That makes sense. Now, given that, you're actively in the market right now because you're advising on deals and also making investments, what are you actually seeing out there? So are you seeing that exits are getting easier or harder for SMEs in the current environment? And what's driving that?
I think I don't know that they're getting easier. I think there are more options for SMEs. So there are more buyers in the market, whether they be, entrepreneur through acquisition type buyers and search funds and the like, or whether they be private equity or whether they be family office or trade. There's more buyers. The buyers at the moment are quite conservative in terms of their risk. So, yes, there's more, but equally getting deals done are a little bit harder. So I think what we're seeing is a trend towards lots of interest, but not necessarily, as many flow through to, competitive process, particularly at the SME level.
Absolutely. That makes sense. Now, you mentioned earlier that, you understand the challenges of running a business because you've been there yourself. You walked in the shoes of the founders. Looking back, what's something that you wish someone had told you about exits when you were when you had the founder mindset?
Know your numbers better than anyone else. Yeah. And so I think fundamentally, people talk about their business and they know their business broadly, but knowing the intimate numbers, what's your gross profit, what's your margin, what's your EBITDA margin, what's your replacement capex, all those kind of core things that really determine and drive value. I think understanding that. And the other side is, how do you acquire clients or customers? And so, understanding, okay, we spend X amount of dollars on marketing, and maybe it's Google ads, or maybe it's, search engine optimization, or maybe it's, meta ads, or whatever it is. But how does that translate into dollars? And do you know the linkage between I put $1 in here and $1 in there? And I think if you know those two things, realistically, everything else is kind of making the system work.
Yeah.
But from a buyer's point of view, they're thinking, how can I grow it? How can I make sure it doesn't shrink? And how can I make sure it makes the same money that it's making for you? And knowing those two things, I wish I had known 15 years ago. Yeah.
Yeah, absolutely. That's great advice. Thank you for that. Now, for the investors who are watching this, who might be looking at potential acquisition targets, or founders who are starting to think about the exit strategy, what are the red flags that you see immediately that tell you that, this business isn't ready for an exit? And what are the green lights as well that gets you excited?
Yeah, the biggest red flag is the seller's desire to exit. So some people say, I want to sell, but they can't remove themselves from the business. That's a big red flag.
Right.
Usually it shows you that there are other things within the business that they haven't removed themselves from. And so therefore the business is stuck with them as a key person. So that's the number one red flag, is seller appetite or seller risk. And then in terms of other things, financials, not being able to get financials quickly. So if you're looking to sell, we say to our accountants, that we work with, the books need to be ready within 3 or 7 days, end of month. So that means it's got to be really quick turnaround time. Correct. Because the buyer wants the up-to-date information.
Right.
So if you don't get up-to-date information and you've got a seller who's a bit sticky, then that's a big red flag. That's a big no for us. And then the green flags are, really good financials, really clean, a seller who's ready to price things fairly, and it doesn't mean that it's cheap, but just fair. It's a good business, fair price. They're really good signs. And I think it's growing, right? Growth is good. Yeah. Too much growth is sometimes a bit scary, but growth is good. So
correct.
If a business is growing and they've got their house in order, they've got their financials, they understand, product market fit, they understand how to make money. These are all the green signs we look for. But the number one is, what's the seller really want to do? Do they want to exit, or do they are so in the business they actually can't exit? And that for us is the biggest determinant of whether it's a good transaction or not. And look, if you're an investor wanting to invest, reach out. We've got plenty of deal flow. So, we'd love to help those sort of identify red and green flags really early on to not waste time.
Absolutely. Now, what are the things that you would say that you're excited to see in the future for both Frank Law and for Brolly Capital?
Yeah, look, for Frank Law, we're kind of big on transactions. So, really going deep with clients on understanding, preparing clients for a sale, preparing to explore options in the marketplace. We actually have a sister company that does the advisory piece as well. So really helping at a ground level explore capital options and what all that looks like. So we're seeing lots of SMEs start to look up a little bit and go, what is out there? And let me explore that a bit more.
Right.
Look, Brolly's pretty boring. Like, we look for good businesses to invest in. We look for really good people to back, who we think we can help make meaningful change in a business.
Yeah.
But look, we're excited about the market. The SME market is alive and well. It's healthy. People are growing. There's lots of people that want to exit. And there are really good businesses out there to invest into, and also really good businesses for people to sell, which
Absolutely.
is, we're quite passionate about making sure the SME founder gets the best option for their business. And that can be a variety of things, but it's really working with that founder to go, what's the legacy? What's the money? What's the, goal of this, rather than just be what's a money transaction? There's a holistic look. So yeah, it's pretty exciting.
Now, with Brolly Capital, are there any particular sectors that, excite you more than the others?
Look, I like quite industrial, higher businesses. They kind of excite me because I know a lot about them. So yeah, I'm probably more around sectors that aren't necessarily going anywhere, that are going to be here for another 100 years.
Yeah.
That's kind of the things that interest me. I have a particular interest in quick service restaurants. There's a sort of play there. So, we're seeing El Jana and GYG and stuff.
Yeah.
That kind of the new concept where founders really want to run not scale it to be 2,000 stores, but run really good. I like that because I'm interested in food. I'm interested in people.
Yeah.
That's cool. But yeah, boring industrial businesses for me, every day of the week, I love them.
Yeah.
I think there's probably the sector that really interests me at the moment is where you've got a bit of defense spend. So
Right.
where you've got sort of, whether you're involved in Defence Force assets, or maybe you're a business that supports the Defence Force or supplies something to them. That's of particular interest because I don't think that's going to go anywhere anytime soon. So
Wonderful.
Yeah.
Now, before we wrap up our conversation, James, it would be great. You've been here today at the Business Exit Summit. So do you have any key takeaways that you could share with the audience?
Yeah, the first is prepare and prepare early. So I think all the panelists have been really clear on there's lots of options, but it's all about preparing early and really tackling the challenge. You can't leave it too late. You got to start early, give yourself lots of prep time, because then you get to explore all the options in a really clear way. So I think number one is prepare. Number two is get the right people on your team. So the right advisors, the right people that can help you go from here to there. And then the third is be open to options. So don't just box yourself into one thing. Don't leave it too late. Give yourself optionality. And if you prepare well, get the right team and give yourself options, then you've got a lot on the table.
Amazing. That's great advice. Thanks for that, James. And thanks to our viewers. Thanks for tuning in this conversation. I look forward to seeing you all in my next interview. And thank you again, James, for taking the time to speaking with us today.
Pleasure. Thank you.
Thank you.